The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome back to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. And as we look out here at today, we start the show. Not futures, but actual S&P cash up a bit, up about 6 points at 1953 with 1.55 billion shares. My guess is that we're going into a fairly decent and quiet week of low volatility. And I think it really started kind of Tuesday. I was kind of slow to pick up on it, but we're seeing that light volume with the slow push up. It is not uncommon to see a lot of short squeezes in the last few weeks of August. The big guys of Wall Street all take off and go to their Hamptons vacations or somewhere else. Probably wanted to go somewhere else this year as the president's up there snarling all kinds of traffic. So they probably want to stay out of there, or at least stay at their homes. Probably not traveling a great deal around the Hamptons because getting it all Martha's Vineyard, wherever it is. But they're big on those Hamptons houses out there on the water. And when they decide to cut loose, they say one thing. We don't want any volatility. We don't want stocks going up. We don't want stocks going down. I want you to kill any movement in this market while we're gone. And if someone buys, you sell on the other side. If someone sells, you buy. Make sure this market doesn't go anywhere while the adults are gone. You guys are the B team. You're junior varsity. You guys are just here to make sure that the market doesn't go anywhere. Why I, the king of all I survey, the head of some big Wall Street firm, is out having a good time. At the same time, those guys don't appreciate anybody like Putin or the president or anybody doing anything while they're gone. And they normally go on this week because it's the last week that they can take their kids out to those Hamptons houses. If they're in school, they go back in New York. I'm pretty sure they go back a week from Monday. At least that's what I've heard. But I think we started seeing some of that today and some of those other ones. Yeah, Royal Pains. Good, kind of a good programmatic show, although I think it's a little weak this season. But as we look at this, I think we're going to see exceptionally light volumes and very, very light volatility. And the problem, especially after our downturn, is that people are going to want to get short. And without any volume, you don't really want to be short a quiet and a low volume market. And of the moves I've seen and wicked moves that I've seen, it is kind of tough. Now, once we get through that, of course, we have Labor Day on I think it's the 1st of September this year. So we're going to have a short week. That's on a Monday. We get a short week, Tuesday through Thursday. I believe we're probably going to see a great deal of people still on vacation in Wall Street. So I'm not looking for volume to return in this market until the week after that. And that is, what is that? September. So that's the 1st. So that's the 8th of September. Now, on the 9th, we have Apple coming back with their PR fury, with their propaganda machine. And that propaganda machine is going to be talking a great deal about their new smartphone, which is supposedly going to be a phablet, and maybe even other products. Long on the bull, short on substance if they're not shipping, but it does not matter. There is the cargo cult of Apple, and it doesn't matter whether they make money or not, or the product's going to sell. They will believe it was going to sell, and from the movement in Apple itself. Let's get a quick look at Apple. 197.53. To me, this thing looks like a ringer for hitting 100 and maybe a little bit over it as it goes into that September high. I'd been fairly bearish and thought that maybe there was an opportunity for this market to crack. Volumes went light. They shook out the longs at the bottom and started moving this market up. I didn't want anything with a close over 1938 on the S&P cash, assuming that we are going to have a light volume move up. And then, of course, September 3rd, we've got Samsung talking about their new smartphone. Then we've got on the 9th, and my guess is we're going to have an endless procession of PR people and propaganda machines like Apple with their fruity cargo cult, as it's called. It is going to be awful tough, I think, to be short for those first few weeks. My guess, though, is that as soon as we get done with Apple, we're right on probably for the 15th for the Alibaba IPO, maybe the 20th. And this is going to be the biggest single payday ever on Wall Street. And you're going to see these guys do whatever it takes. If there has to be 100 different upgrades to every stock in the world, if there's nothing but blue sky out there, we're going to see it. We also see the financial engineering behind us in the central bankers, and my guess is that we're going to see a great deal of that trying to get Germany out of its nosedive in Europe. But more and more it looks to me like we're just heading off what will be a deflation in the near future. A stronger dollar will probably keep the big multinationals down. My guess is that for the last 3-4 months of this year, we're probably going to rally into the election now and maybe even into the end of the year. And it's all going to be juice from those central bankers around the world trying to head off everything before the elections. And my guess is that the mentality of the U.S. Average composite person doesn't change much. But after the first of the year, or maybe after the election, early November, we'll see something. Retail has stunk so bad that my guess is that we're probably fairly close in the, at least retail sector ETF, to some kind of lows, even with Macy's starting to crack, which was the preeminent retailer, the last man standing in these giant malls that tend to be more vacant these days. It's been a couple of years since they've had a real good young teenager move for fashion, and my guess is that those jeans are starting to wear out, and there'll be probably at least some people buying some new and decent threads come this fall, and I'm not looking to go back up to those lofty levels, but I think there could be a few confluence of events that keeps this market up, and my guess is if we do that, then we're going to see a lot bigger downside than I was thinking to begin with after the first of the year. But we will continue. On this day in 1935, the Social Security Act was signed into law, ensuring some of the retirement income for all workers in America. Payroll taxes are set at 1% for both workers and employers on the first $3,000 of earning. And I always remember the first lady, the first person that got any cash out of the Social Security Act, put in $22 and got out $400. And I think that tells you everything about how the Social Security Act works, the biggest Ponzi scheme in the world, and proof that the road to hell is paved with good intentions. One day we're going to all look at that and just shake our heads. Red Robin is the disaster du jour. And as we look at this, let's see, update link. Yeah, $51.39, off about 20 cents. I just showed something really neat. Most people won't even notice it here. And that's linking quotes to my real-time screen here. Very neat. 20 minutes delayed or 15 minutes delayed, but it's still a lot better than me doing the quotes at 1:30 and hoping that they were still close enough when I did the show. So now we're just 15 minutes delayed or 20 minutes delayed on these, which is pretty cool. And I got that working, so I'm happy about that this morning. We could do just a little bit better for you guys. Anyway, Red Robin, a wonderful place if you've never been there. Burgers and cereal malt beverages, and lots of them. And you'd have to think this place was doing pretty good. Kind of strange that it's not. The Chief Executive Officer, Steve Carley, says, although we are satisfied with our top-line performance through the first half of the year, we are disappointed that our marketing efforts in the second quarter did not produce the desired results in an intensely competitive environment. Actually did good on revenues, didn't do good on margin, and I think that's what really is good. And somebody's trying to chime in from the cheap seats that all things that are bad for you. I don't believe that. I believe cereal malt beverages, adult cereal malt beverages, and charred animal flesh are both good for us. They make us feel good. About last night, boy, did we have a earnings Lollapalooza. When we look at these, is that right? Yeah. Noodles and Company, we've been talking about all these, and I think I talked a little bit about this yesterday. I was expecting a downside to it, didn't know how far. Way too short to go and play in this pond. But it's another of these big IPOs that got pushed out way above any kind of justifiable issue. Now, when Facebook came out, I said, and Twitter, Twitter's probably a better example, but you'll get 1 out of 10 or 1 out of 20 that actually work out well. But if a company has not figured out a way to be profitable before it goes public, the odds are astronomically against them. Now, we've had a few of those buck the trend, but my guess is that we're going to see a lot of these for other ones. Anyway, Noodles and Company off 18% as of about 15 minutes ago. But that is one of those recent IPOs that we've been talking about. Conatus Pharmaceuticals off 10%. CNAT Aspen Technology off 10%, trading out at $41.50. AZPN X1. Now, we talked about this. I was expecting a little bit bigger move down from X1. We'll look at the chart here in a little bit, but I think it was off $5. It's up a little bit better. I don't think it went down and touched that low that we were hoping for, but I think it's into that high volume candle. So maybe we're getting close on that one. NTAP off, up almost 4%. American Residents up into a little bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, we were talking about some of these, and some of them are even starting to pop back up here, so we'll take a look at them in a few minutes, maybe at the bottom of the hour. Some of them are looking a little bit better. Of course, the market's probably helping a bit on that deal, too, as we take a look and update the S&P. Same thing, 224, 1953 on the S&P cash, 1.6 billion shares, so light volume, and NASDAQ up 11.5 points. So nothing really to scream about just yet. When we look at the volume out here, 1 billion shares on the NASDAQ. So it's a light volume day, but I think we're deep in the end of the summer pullback, and light volume will persist, and not conducive for being short this market. Anyway, X1's starting to pop up here a little bit. Thank God for that now almost real-time update for my charts here. About tonight, after the bell, Applied Materials, Allergent Technologies, Cena, Extreme Networks, Weibo. Weibo's the only one seem to be really moving. Of course, it is the Chinese internet company. And a lot of those folks kind of like that stock. it is trendy. And, of course, you're probably going to see they follow along at least within a few days of the Alibaba IPO coming public, that a lot of these companies are going to be actually doing that. So what else do we have going on here? And that is, what do we have here? Oh, Nordstrom and PDL Biopharma. So these are the ones with any kind of volume today after the bell. Weibo kind of interesting to me out here. It is a mad market. So let's take a look at X1 here. Real quick. XONE. And you got down in there, but you had higher volume. So what you were hoping for was getting back into these lows around the $24 and $25 range on X1. April 15th, you had 500,000 shares. You had 430,000 shares on May 20th. Now you're back into this one more time with light volume. Of course, I think you had about 15 days to cover on this. In fact, let me look, because I did have it queued up here if I can get it. There we go. News. X1. 7.5 days to cover. So fairly big short covering amount to be had out here. And that's why I said, even when you're right on a lot of these in this kind of market, in short volume markets, you need to really be worried about whether or not you're ever going to be able to get out of it before the rest of the people start covering their shorts. And I guess maybe if you did it at the open, you'd been okay. But down to 26.43 on here. Let's just take a quick look and see how its brethren did fare. And not a lot of movement in 3D systems out here. They kind of, it's up against resistance. Let's take a quick look at SSYS. And let's see what we have here. This one's still coming back into the gap. Kind of surprising that this one hasn't, rather light volume. My guess is this thing's going to come back down to 105, which is that area of a double gap. Those double gaps tend to like to be support areas. So you got 105 to 103. That's where I'd be looking at this one. You had a nice spike on earnings on this one on the 7th with 8.2 million shares. And, of course, we got 700,000 shares today. So not a lot happening out there. Let's see what else we wanted to look at. Mr. Robin. Let's take a look at Red Robin and see. I'm pretty sure this thing had broken out most of the lows. Yep, blowing out long-term moves in this. And boy, I tell you what, you didn't want to see that gap break at $58 if you're long this one. Probably an exhaustion day with the huge amount of shares in this stock. But probably have risk back into this huge candle day. That candle was on the, May 21st of 2013. Not a lot of volume. So you're going to have to watch it out here. My guess is you're into that candle already. That goes down to about $45. So you're going to have to watch it on this. Probably going to go sideways for a little bit. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're back at a request from Danny in Atlanta to look at silver wheaten. And certainly looks to me like this thing's in a trading range. Silver wheaten, let's get the full profile on these guys. But, I mean, you could probably, until this last move up from the lows on May 28th, say that you had lower highs and lower lows. And many times when you break out of these, are on the wrong side. And that's exactly what happened on silver wheaten, the asymmetrical triangle. In fact, I think I can probably do this right now. Let's pop that up, see if I can make this big. Move that down a little bit, and can we zoom in? Tools, image, view. I'm learning a new one here. Oh, there it is. My roller. Anyway, let me go to my tools here. Normally what you should see in an asymmetrical triangle is that lower or higher lows and lower highs. And you kind of had that for a long time out here. Normally what you get on the first break of an asymmetrical triangle is kind of like putting a greater sign on it. And all the highs and lows should kind of come in to it. And if you're watching on Tiger TV, I've got it up here in my drawing program just so I can grab my chart and watch it real quickly. Now, we're not back into that triangle so much, but boy, you got a lot of movement out of it today. Now, generally the thought, though, is that if you go more than 3/4 into the point of where the triangle would go, that the first bust out will be to the wrong side. And I think Tom was talking about this just the other day. I don't know if it was about this stock, but I think it was about triangles. There are several kinds, and I don't know if he brought it up, but this one is known as the asymmetrical triangle, at least the way I learned it. And that's pretty much the way these things work. The first bust out is on the wrong side. So normally you want to short when they pop, and then you want to buy when they break down. And this one had some good volume patterns and everything else that you would expect. But a lot of times these triangles are more powerful than the volume signals on them. And that's what you have here in silver Wheaton. So a good example out here of this thing. And if you see this thing back in the $25 range, normally it will move fairly quickly right back into the bottom of the line. In this case, that'd be right around that $21 range. So this thing could have some very quick movements in it. I didn't see any news on it to make it happen, but we'll take a quick look. Low silver and gold prices. Silver Wheaton, Pan American, hammered by low in silver prices. Traded around 1985 on Wednesday afternoon, down from their 52-week high of 25.11, not much above the 52-week. Okay. Just looking at the article real quick. Doesn't look good. Anyway, yeah. Here's where you might see silver actually diverge, especially in the South American countries, from the price of silver itself. But to me, these miners all look rather weak. I wasn't much on them. But I digress. Anyway, that was it. Missed earnings yesterday. I was looking at some of the other stuff in here in the deal, but doesn't look good. But yeah, you'd probably look for this one to slowly move back down to that $21 range, which is just the bottom of that asymmetrical triangle. Now, there was something I was thinking about, but I can't remember what it was now. Oh, I think it was that Red Robin. We looked at that real quick. And, yeah, this is back in there. I was trying to remember if there was any others I wanted to look at. I don't know. Let's look at some of the ones I want to look at. Cree, of course, came out with earnings, and it also has been kind of down the last couple of days. A couple of dojis out here, and if you're wondering what I'm talking about when we look at exhaustion moves, that is when you get all the move in one time, kind of like the light bulb that burns twice as bright, only burns half as long. And what we see is this low yesterday with pretty massive amounts of movement. And it was a doji out here. Now, a lot of times it's going to be that halfway move, but before it continues on down, most of the time what you're going to see is it moves sideways for a while. And just those high volume moves could do that. But very interesting chart out here. My guess is that this thing is headed back into $38 range of this big gap with huge volume, 14.2 million shares, and that's where it lies. The low a day was 38.27 on the 23rd of January 2013, and that's where I think this thing is headed. If you've been reading the Tech Insider, we were short this a couple of times and made some decent money off of it. Wasn't short last night. I like to get short when the stock's real high, not after it's been beaten down a few times, mostly because, of course, everybody else is short. We were shorting this one. No one else was shorting it, and I kind of liked it that way. Now, too many shorts in the deep end, I think, out here, and kind of be tough to get a lot of bread out of this one. But I don't know. I've been talking about this as a technical issue with companies like Walmart and General Electric getting in to the light bulb business, at least the LED market. I was basically talking in this last big move up here, back up to 67.98, just how tough it was going to be for them to compete over the long term in a market that it traditionally has been a commodity. And of course, Walmart started selling bulbs for $6 and made it awful tough for those folks to get anything done in the way of margins. So margins are probably going to continue to creep down, although there are a few states where they get some decent credits for buying LED lighting. Most of those are starting to fade into the sunset and going to be a lot tougher. I've converted over to LED bulbs, and I bought a bunch at IKEA for about $4. They're going to last about 10 to 20 times longer than that, and most of the ones I bought were 4 or 6 watts. So not much more than a night light, and if you're looking at me, you're looking on Tiger TV, you're seeing me totally lit with LED lighting now. And now that they have those sunlight-colored bulbs, actually not too bad looking. Diamond Offshore Drilling. This one's down here, actually getting fairly close to the lows on a light volume. And, of course, these offshore drillers have been the weakest of that territory. We were short in the daily newsletter for energy, and I kind of stepped out yesterday on it and the rest of my shorts, mostly because I started seeing these charts like Diamond Offshore coming down and getting awful close to the lows. This has not pierced the absolute low of March 17th yet at $43.69, but it is getting close. What do we got, about 70 cents out here? But it's into these big candles with lots of volume. In this case, it's into the, March 13th low candle that had 4 million shares, and you're doing about 1.2 million shares. So I'm not going to get real excited about this thing busting out this low in the next few days, especially with the market moving the way it is. Tesla, another one, it has gotten into these highs. I'm watching it. We've talked and had a call about when we would short Tesla. I was thinking this thing's probably going to go to something like 285. You're going to have to get rid of a great deal of the shorts in this market. And, 90% of the time, you get a $265 high with 24 million shares tested with 8 million shares. The thing's going to blow up in the next day or two. So you want to be watching this. But my guess is with the fairly large amount of short interest in this thing and everybody watching it, it's going to be tough. This is one of the weakest looking stocks. Fundamentally, I can probably go on for an hour on why this is somewhat problematic. But like I said, if you've got a lot of shorts in a stock and the volume collapses to nothing in the general market, you're probably going to lose anyway. And that's why I'm thinking that either this thing goes sideways for a few weeks or we do pop up and they run all the shorts at one time and you get 280, 285 on this thing. And you just have to probably pull the trigger on some options. I think is probably the only way you could play this. Of course, Consumer Reports came out, didn't give them the glowing representation they had before out here. We were talking about miners acting a little weak. I'd been watching the XME, and of course this is metals and mining. And this one just slightly lighter volume than the April 4th in the last few days. But really the one I've been looking at is this January 3rd high, $42.86, 3.7 million shares. So this is the second test of that high with 2.5 million shares over the last few days. And we're just kind of toying around up here. But my guess is that there are deflationary winds in the weather, and they're going to probably come after metals and miners first. And it's going to be problematic, much like we saw in silver wheaton, to hold those margins up. I don't know about I'm not so bearish on the actual metal itself as the miners who couldn't make money when gold was $1,800. What makes you think they're going to make money when gold's $1,300? I think we had a really good run on it, but to me, I'd be much more willing to bet on the price of the metal now than the price of course, the miners out here making any kind of margin. They seem to be able to basically screw up anything over time. probably the worst managed sector in all of public stocks. If they can't make cash and make huge cash at $1,800 or $1,900 and sell forward. So yeah, and the steals are flying. We did bring up one of the nice little pops, which was United Steel, which were bigger than the United States Steel. We're bigger than U.S. Steel. You got to think the people on The Godfather and Hyman Roth were bigger than U.S. Steel. I'm going to have to get that quote and play it. Anyway, yeah, still going up, but what you look at out here is problematic to me. Probably in a day or so, we're probably going to see U.S. Steel be at its high. My guess is it's now going to probably come back to the breakout area around $31, and probably not going to take all that long. Mostly, a lot of those car dealers are starting to show some weakness, and you're probably going to see some weakness in steel. What else do we have? Last night, losers tests. See some of these other ones I'd been watching. Yelp, wanted to see this one. Looked like it was going to fill the gap. We talked about that yesterday. The day before. Filled the gap yesterday, going up against a 14.6 million share candle on the 30th of July. Got into it with 6.5 million shares yesterday, kind of going sideways out here. I would be watching this one. If there was a stock that I'd want to short, it would probably be Yelp. You could almost make a case that this is the 50% retracement of that move down. The news has been nothing but nasty on Yelp. You can do a lot of things without going on Yelp, and why Yelp probably is killing off Angie's List. I have a feeling that there are other products out there that are probably killing off Yelp, and probably nothing more than the ability for you to write a review about people you dislike. It's very tough because you're always going to find somebody that has had a bad experience. I think probably Amazon does the best job of making sure that actual people that bought the product on the website get to review it. Newegg's pretty good about that too. Got a good quote in the Tiger's Den here about Hyman Roth. Or Michael, we're bigger than U.S. Steel, which is I knew. But Hyman Roth also said, I loved baseball ever since Arnold Rothstein fixed the World Series in 1919, the Black Sox. Anyway, Yelp out here. I'd be watching this one closely. I think this is one that could see some really bad news. When I look at the rest of the stocks, like Microsoft, we did a kind of a review of Microsoft last week on the Tech Insider Hour, and I basically said these things had come back and filled these huge moves up, and pretty much what we were looking at in Microsoft. Now, it's coming up, and it's coming up with a light volume, but my guess is that a lot of these bigger stocks are probably in some trading range until we get some kind of move down with volume from about Microsoft 42 to $45. And I would not be surprised to see this thing meander around this range and maybe end up in the $45 range toward the end of the year. But I think the biggest part of this move is done. When we come back, we'll look at Intel, which is basically the same thing. Came down, filled the gap on the way back up. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market.
Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we're just talking about just the high-tech stocks out here. I mean, you had a little bit better candle out here on Intel yesterday. The volume did pick up pretty much compared to the days before it. But I think we've got Microsoft, we've got Intel, and we've got Apple all looking like they're probably going to meander back up and stumble back up to these highs, I suspect, as we come back for the first week of September. It's going to be on light volume, but of course, like I said, the big thing is to make sure that everybody is probably got the momentum to a minimum of these. And probably the best play is to look for these stocks with very, very high short interest rate that don't have any news coming, and see and watch for short covering over the next week or so. There's probably not going to be a great deal of movement other than that. But when you look at Intel, let's take a quick look at Apple. Certainly looks to me like this thing, they're going to run it right up into that announcement on September 9th for the new products. Not a lot of volume out here. This is thing back into a gap down that happened with 56 million shares. And, of course, it's on 22 million shares. So none of these stocks look great out here. The downside is that volume is shrinking both on the upside and the downside. And it is problematic to see a stock with a decent short interest really fail. Or let me put it there. It's rare to see it fail in the last week or 10 days of August for the reasons I mentioned at the beginning of the show. So just keep an eye on these. I'm not expecting a lot of movement. I think we're going to have a lot more movement in some commodities and some of these stocks that do have earnings like we covered out over the bell. Cisco, we were talking about that yesterday into the earnings bell, and I said maybe this thing's got a dollar movement in it, up or down. It was down. Looks to me like they're probably going to drift back into that $24 level over time. But they were kind of negative on the earnings call, but long-term positive. And I think that's what you're seeing here is they say probably the next 3 months are going to be somewhat difficult, especially in Europe where a lot of the governments are cutting off spending, especially to manufacturers of hardware like Cisco. And I think that there's a play off that. I actually bought a stock yesterday and looking into seeing how that does. We got just a little bit of time left over here. Let's check on the S&P up and just a tick under 7 points on the S&P cash, 1.8 billion shares, so volume going light. And, of course, tomorrow is expiration day, and we're going to have to see if we get any movement on it. But my guess is they are setting this up to probably expire at 1950, 1955 tomorrow, and not expecting a lot of movement into it. Just get ready for the light volume moves, I suspect, across the next week or so and into Labor Day. Of course, that is going to be on a Monday, and we'll be closed, TFNN, so we'll be back that Tuesday. But it's going to be, I suspect it's going to be, the movements are going to be much more centered around commodities. And, of course, I think tonight we've got Andy Heck that comes on at 5. He'll be talking commodities. But always a good, when markets are a little bit quiet out here, good sector to start looking at when the equities go quiet, because those commodities, they just seem to turn 24/7, don't they? Always a movement in the commodity markets for some reason. And maybe Andy will talk about it. We are going to Tom O'Brien up on most of TFNN after this short break. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.